If you're thinking of buying a home or was wondering the way I did it, for this video I'll explain a USDA and VA loan. So USDA, aka United States Department of Agriculture, versus the VA loan, which is Veterans Administration Loan. But first, I gotta open up with this question. Why was the mortgage so clingy? It hated being alone. Ba-doom boom, let's send it. What is up, Money Tribe? Mike Damazo here to help you make sense of dollars. Our mission is to help you get the F out of debt and then build wealth. On this video, we'll go through what a USDA loan is, the pros and cons, then we'll definitely switch gears, cover the VA loan, plus the good and the bad. Then for you, I'll share a bit of my history between the two loans, lessons learned, and advice if you are thinking of getting into real estate and choosing between those two loans. If you don't want a traditional mortgage, a USDA home loan will be a zero down payment for rural or suburban areas. USDA loans are provided by the US Department of Agriculture. This program has helped over 127,000 families with their homes. The goal of this is to improve the economy and quality of life in rural America. So basically, if it's farm town USA, there's a good chance there's a USDA loan available for that area. So, do you want the good news first or the bad news? Alright, let's start with the pros first. With a USDA loan, it offers a low fixed interest rate. In turn, that lower interest rate can lead to a lower mortgage and less money spent over the lifetime of that loan. Next, zero down payment. This means no money required at closing except for standard closing costs. Low cost origination fee, you'll pay less upfront in closing costs. Now, some challenges with the USDA loan are it is for primary residence only. This means it isn't for an investment property, but that doesn't mean you can't house hack it and rent out the other rooms that's available to you. Not all houses are eligible. The reason being is it is for more rural areas where the USDA wants people to move to. So if you are thinking of going to a big city, I doubt that there would be any areas that would approve a USDA loan. But once again, I'll put in the description of the link to check USDA loans eligibility areas. There is no cash out refinance, meaning if you want to cash out from equity, I don't think it'll happen. VA home loan is, in my opinion, one of the best, most useful military benefit if used correctly. For those that qualify, you can buy, build a home, or refinance your existing home mortgage with as little as $0 down with awesome low rates. Now, let's go over the good, then the bad. As mentioned, one of the positives is the 0% down. See, normally there is this thing called PMI, Private Mortgage Insurance, a monthly insurance fee charged so that banks are covered until you reach 20% equity. With a VA loan, you won't have that. So that plus is a 2-for-1, zero down and no PMI. Next plus is they have higher allowable DTI, which is debt to income ratio. Now on this, my general advice is to have no consumer debt like high credit card bills, personal loans, or auto loans that you can't properly manage. Some setbacks with the VA loan is eligibility. As you can tell, VA is for service members and veterans who qualify. Most every VA loan comes with a funding fee ranging from 2% to 3%. You can roll this into your loan amount. Another challenge would be some sellers aren't on board with VA loans. Alright, so let me share some history about the two loans with my own personal experience. When I was stationed in Central California, I planned to purchase a home there and rent out the other available rooms. I wanted to use my VA loan because it was the loan that I knew to use because it's something I had. But I had someone that was able to guide me into tapping into the USDA loan, which was super helpful because it worked out where I didn't need to use my VA loan yet. And at that time, I was still working on paying off all my debt. I missed out on buying in San Diego, so I knew that purchasing at the next duty station was definitely the gangster move for me. Remember, gangster moves only. With that said, check out my other videos where I cover a bit more about house hacking. As always, it'll be in the descriptions. When I got new orders back to San Diego, moving back, I knew I wanted to purchase again, and only do so if the numbers were right. Definitely always run your numbers when it comes to big or rather monumental purchases. This time I used the VA loan and went with a property that I wasn't able to house hack, but the location choice was the better play. It was 5 minutes away from the beach, walking distance to a lot of places to eat, a prestigious university nearby, and overall it was a great neighborhood. The biggest benefit has been the 0% down and building that equity from the properties. Now, everyone has their own set of rules when it comes to real estate investing. Remember, personal finance is personal. My whole game plan was the slow play to wealth with rental income, and it was to try to get property in each duty station only if the numbers were right. Definitely leverage the tools available to you. Thank you for watching. Gently tap that thumbs up if this was helpful. Sound off in the comments below if you have any real estate questions or any videos you would like me to cover. High five that subscribe if you haven't already. Stay legendary, and I'll see you in the next video.